Well, shares of textile stocks surge as Vardhaman Textile, Gokuldas Exports, Wellspun Living, Ambika Cotton Mills gain in trade after Centre removed the 11% import duty on raw cotton till September 30th.
Reliance is one of the top gainers on Nifty as Jio discontinues its entry-level plans, with brokerages expecting it to lead higher revenues for the company. In an added tailwind, the SEBI proposal to lower minimum public offer requirements for large IPOs could have a positive impact and implication for the potential Jio IPO.
Vedanta share price rises as it announces the board meet later this week to discuss what would be the company's second interim dividend in FY26.
New entrant on D Street today, Bluestone Jewellers lists at about a slight discount to its issue price of 517 rupees. We will be speaking with the management shortly. Stay tuned in for that.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Vinny. And the markets are holding with some gains of around 35 to around 40 points. After the big rally that we saw yesterday, holding up in the green is something that the street would like, Vinny. And plenty of stocks, though, from the broader markets doing a jig of their own.
Absolutely. Plenty of stocks that are in focus today. And good morning to you as well, Nigel. Now, obviously, markets managing to hold on to that some bit of a gain. Yesterday was a very good day, right? Now, today, obviously, a mild day coming in, but nothing bad and nothing to complain on that front. And like you were talking about as well, a lot of stocks that are in focus in the broader end of the market, especially look at the textile stocks that have come in as well, right? They are buzzing in trade because of the import duty that has been stopped right now for 42-day period that is starting 19th August to 30th of September on import of raw cotton. So that will help them in terms of their cost, at least, given that there was so much of an issue coming in, Nigel. But we do have Bluestone Jewellers that has listed today on the exchanges. A debutant coming in there on the D Street. Discount at a discount is what the listing happened today. Now, to talk about their overall performance and outlook going forward, what should we be watching out from the company? We have Gaurav Singh, who is the CMD as well as CEO of Bluestone Jewellers and Lifestyle, joining in with us for that. Gaurav, good morning and congratulations firstly in terms of your listing. Muted day coming in terms of the listing today, but a lot to watch out for from the company going forward, right? So let's start by talking about first in terms of overall your profitability. You know, that's what we were talking about even last time as well. Now, you're saying that net losses, last time you mentioned, mainly was a reason because of the front loading in terms of investments. By FY26, FY27, if you could give us a number, when can we expect the company now to start seeing profits? When will this front loading of investments end?
Sure. I think, so first of all, thank you for hosting me today. It's a big day. It's an exciting day for all of us at Bluestone. And we are excited to be listed in the public markets and we hope to kind of continue delivering great growth and great results going forward. Yeah, I think one of the things which was talked a lot about was losses, but I think also we need to look at those losses in the right fashion. So in fact, people who are kind of better, who understands accounting, etc., better, who can actually see that there's a multiple non-cash components were also that were sitting in there, which is kind of more of accounting, which is more of because of accounting standards. For example, ESOP losses or ESOP cost, which was I think somewhere around 50-60 crore. For FY26, which is a non-cash, it's more of a remuneration to the early employees, etc., which is there and which generally eases off in a year or two. Similarly, India's accounting, 116 accounting, actually it front loads a lot of rentals. So because of the accounting practices, the rental which is booked in the books is significantly higher than the actual rental that goes out. So I think if you account for a lot of those things, or if you actually take a lot of those things into consideration and then look at YOY numbers, there is a significant improvement. I think so we'll soon be releasing our quarterly results also. At that time we'll be talking about forward projections and forward guideline, etc. Right now it's just, I think it's a little too early for us in the day.
All right. Hi, Gaurav. Good to see you in and congratulations on the listing. A lot of happy faces out there and good job with the bell. You're giving it a good ring, But, the street, when you report your numbers, they'll be focusing on profitability now that you're listed. So we take everything that you said into account.
Yeah.
You're indicating a couple of those points. So probably one-off in nature. For FY26, the company turns profitable?
See, I still hold back my comment on that to the quarterly results when we declare those in coming weeks. I think we've not worked on that honestly, in the sense that the exact forward commentary that we want to give, though we have the plans etc. in place, and it's going to be significantly better. In fact, last year also, while what the market sees a full year number, but with that 40% growth year on year, if I see the difference between the quarter 1 and quarter 4, that itself is significant. Now, given the nature of disclosure standards, etc., I cannot break down the quarterly numbers when I file my RHP or DRHP, etc. But when I start declaring the quarterly numbers, I think the difference, people will see a significant difference between the yearly numbers and the quarterly numbers themselves.
One number that you can give me is ad spends as a percentage of sales. You told me that's likely to come down. Come down to what levels? Like I said, I think any of these forward-looking statements would just wait for... Gaurav, it's permissible now. You're listed. You can give
now you can say whatever you want to say.
It's on board. I mean, when you come money, we know that it's under regulations. But once you're listed, you can give us aspirations. No problem.
Sure. So I'll tell you a few numbers. So essentially, I think for the last full year, that number was around 9%.
Yes.
On a run rate basis, that number is trending closer to 7%.
Got it.
Okay.
And it's going to come down from there.
Okay, great. Gaurav, what
there's
about...
significant, so there's significant operating leverage sitting on different...
Absolutely, different levels and different...
corporate and common cost is also kind of on a quarterly numbers, those are significantly down.
Okay. And Gaurav, what about in terms of the SSSG growth as well? How is that shaping up? How is the demand shaping up? If you give us an indication in terms of that, obviously over the years from FY23 to FY25, I'm seeing a bit of a reduction coming in there. But from here on, is this 32% level maybe something that we'll see this stabilize at?
So we'll definitely see above 20%. So in fact, so far what we have seen is even for the oldest of the cohorts, stores which are open 4 years, 5 years, 6 years back, there also the SSSG was in excess of 20%. So we have never seen any cohort of stores where our same store sale growth has ever dipped below 20%. So I think, and that is something that we continue to see in our current numbers also. So I think SSSG is going to be very, very strong. We are very strongly supported by multiple tailwinds. I think the kind of designs that we operate in, the kind of use case that we operate in, the way we operate, the whole omni-channel behavior, which is becoming more and more commonplace over, let's say, whatever the behavior was around 5, 10, 20 years back, where people would just walk in cold into stores. These days, people actually research online. People do a lot of discovery online, and I think all that is aided us, and all those tailwinds are the ones which are resulting in very strong sales growth. When we see those numbers, we actually see them distilled by different cohorts and so on and so forth. So we have a better understanding of how the granular performance is. I think at a blended level, because we are front loading our investments to grow at a fast pace, some of those numbers are not kind of are fully realized in our P&L right now. But I think the moment we kind of we slow down in percentage terms, so not in absolute terms. So last year when I opened 95 stores, that was on a base of 190 stores. So that's a dilution of almost 50%, or 50% of the existing stores were opened. In the next year, this year when we are planning to open 75 to 80 stores on a base of 275 stores, that dilution is significantly lesser. So I think as those, and then also at an increased top line, I think all the common costs like advertising, corporate and common costs, etc., will also start becoming smaller and smaller percentage of the overall revenue. So I think the profitability, there is going to be a very sharp turn to profitability. And I think in quarterly numbers, we'll be able to kind of talk about those in a lot more detail.
You want to give us your market share in comparison to the peer set?
So I think CaratLane and Bluestone are the only two companies which operate in operate in the omni-channel space. I think between the two of us, we have less than 1% of the overall jewelry market share. So I think what's more important is that this new way of buying jewelry, that is catching up. So I think it's less about the share between CaratLane and Bluestone. It's more about together CaratLane and Bluestone, what kind of market share can they generate, or can they garner over years?
Okay, Gaurav.
I think CaratLane did last year with 3,500 crore or so.
Okay, Gaurav.
Ours was around 1,770 crore.
Sure. So we will watch out for more details, Gaurav, and we're going to hold you to coming back after your earnings that you report as well and give us more details in terms of numbers.
I know.
And
So in fact, I'll also get
FY26.
I'll also get slightly more used to. I'll also get slightly more used to.
Nigel grilling you, that's what you'll get used to it as well.
Gaurav, we look forward to having you back on the channel post your quarterly results or other developments that you will be announcing. For the time being, celebrate with your family, with your team. Congratulations on the listing, and we look forward to chat up with you in the time to come. Thanks a lot for joining.
Certainly, Nigel. Thank you, Nigel. Thank you, CNBC team.
Okay, all right. Let's slip into a short break. On the other side, we have Somal Mehta, who will be joining in to give us his technical view on the markets.
Welcome back. Thanks for staying tuned into Chartbusters on CNBC-TV18. As of now, the Nifty is where we started the show with, right? Not much of a move today. 47 points uptick is what the Nifty is managing to hold on to. And clearly that advance decline ratio today also continues to be in the favor of advances versus declines that we've seen coming in. But IT, that continues to be under pressure. Today we're seeing banks. That's also flip-flopping between the red and the green. So keep an eye out on that as well. But now let's bring on board Somal Mehta from Mirae Asset Sharekhan to understand and get a check in terms of the markets and the technical front. What are we watching out for? Somal, good afternoon, and thank you as always for giving us your time. Let's talk about the Nifty as well as the Bank Nifty. What are the important levels that we're keeping an eye out on? Today also, Nifty is around the 24,900 mark, managing to trade above those levels. What is the important level for the Nifty today as well as the Bank Nifty?
Hi, Vinny. Good morning. Nifty has just started a uptrend in the very short term. We've seen a good correction in the last 6 weeks and a positive close last week, which was the reversal, first reversal from down to up now. Triple bottom in the last week around 24,300 levels. So overall, the positive view for short term, for medium term outlook in the Nifty. Bank Nifty has a little bit of concern where Bank Nifty is still trading below 20 and 40 daily moving average. On the other side, Nifty is already trading above 20 and 40 daily moving average. That's one concern. But the positive thing is that PSU banks have just started to move in the positive zone. The Canara Bank, PNB, SBI, they are all started looking really good from these levels. So I'm very positive on the markets at the moment. Nifty, Bank Nifty, both. For Nifty, my targets would be in the very short term, 25,200 would be my target. And above that, the previous swing highs of 25,680 would be 670 would be my targets in the short to medium term outlook. For Bank Nifty, also my targets would be around 56,500. I'm expecting Bank Nifty to start moving up with a positive momentum about 20 and 40 daily moving average. So the strategy should be to buy on declines, and PSU banks are looking great.
Okay, PSU banks are looking great. Strategy to buy on declines. Somal, what about individual stocks?
Individual stocks, as I said, PSU banks. So first would be Canara Bank. Canara Bank is looking great, just about 20 and 40 daily moving average. A small consolidation has broken on the upside. So stop loss would be 108 and target would be 118. It can go higher as well. But in the short term, the target would be 118. The next stock I have is National Aluminium. Overall, the middle pack is looking great, but this stock has very good risk-reward ratio, taking support at 200 daily moving average. A small consolidation break on the upside. Stop loss would be 185 and target would be 200. I'm looking for a very good medium-term rally as well in this, but in the short term, 200 would be my target.
Okay, Somal, keeping an eye out on those stocks over there as well. But thank you so much for joining us as always and giving us your time. But now let's shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Bharat Giani from moneycontrol.com joins us to talk to us about the stock that he's tracking closely. Bharat?
Today's ideas will be Lemon Tree Hotels Limited. The company posted strong quarter one FY26 results with revenue growth of 18%. RevPAR grew 12%, driven by 6% improvement in both the occupancies as well as the average room rates. Operating margins improved by about 150 basis points, driven mainly by operating leverage due to strong top-line performance. The demand momentum continues to remain strong. The Lemon Tree portfolio at 72% occupancy, there is a significant scope to improve the occupancies at the existing assets. The company aims to add 8,000 keys over the next few years, mostly via the management contract basis, which will also aid the top-line growth. With healthy occupancies at the industry level, the industry is able to sustain the pricing growth, which will also aid in the overall growth momentum. We expect the margins to improve for Lemon Tree as the major renovation exercise gets completed by first half of the next fiscal. Lemon Tree is witnessing about average 15 to 20% increase in the room rates post renovations. This will be a key margin driver for Lemon Tree hotels. If the GST rate on hotel rooms below 7,500 rupees, which is the mid-market space, is reduced from 12% to 5%, then it will be a big positive for Lemon Tree hotels, which primarily operates in the mid-market space, as it will help to significantly boost the demand. At the current market price, the stock is trading at an EV by EBITDA of 15 times FY27 projections.
Thanks a lot for that, Bharat. For the time being, though, we'll slip into a short break. We'll come back. We'll get you more news on the markets and stock-specific action. Welcome back. Well, the markets are holding mildly in the green. We're up close to around 50 points or thereabouts. In fact, now we're holding on to those gains as we speak. But heavy rains continue to torment Mumbai as torrential rains lead to heavy waterlogging, transport disruption and flight delays. The IMD has issued a red alert for the city with a forecast of heavy to very heavy rainfall at few places. Santya joins us to fill us in with an on-ground report. Santya?
Heavy rainfall in Mumbai and nearby areas continues on Tuesday morning. The situation has become worse because of the combination of heavy rainfall along with a high tide of over 3.5 meters. Right now we are in Mumbai's BKC area, and what you can see in front of the camera is the Meethi River. So this is how bad the situation is. BMC Commissioner told CNBC-TV18 that the danger mark for Meethi River, the danger water level is 4 meters, and at present the water level of Meethi River has crossed to 3.10 meters. So that's the situation. Keeping this in mind, BMC has started evacuating the nearby slum areas. People who are not from Mumbai, viewers who are not from Mumbai, there are multiple slum establishments on the bank of Meethi River, and that's why those people are vulnerable, those establishments are vulnerable. Keeping that in mind, the evacuation work has started. Total 5 NDRF teams are deployed in Mumbai alone. Keeping the extreme situation in mind, BMC has declared a holiday for government and semi-government offices, barring those who are a part of essential services, emergency services. Other than this, BMC has made an appeal to all the private organizations as well to give a work from home or a holiday to their employees depending on the nature of their work. As of now, this is the situation of Meethi River. A holiday has been declared for all the schools and colleges, not just in Mumbai but also in Palghar, Thane, Raigad, Ratnagiri and Sindhudurg areas. IMD has issued a red alert for Mumbai, MMR region and North Konkan belt for the entire day, for the next 24 hours. Keeping the extreme situation in mind, BMC Commissioner has assured CNBC-TV18 that the entire BMC machinery is on the field to ensure that Mumbaikars don't face inconvenience. Talking about the commute, massive traffic jam on Western Express Highway continues. Local trains on Central Railway are running with a delay of 10 minutes, and local trains on Harbour Line are running at a delay of over 5 minutes.
Okay, Santya, thank you so much for that. As of now, a red alert that's come in for Mumbai, so do stay safe if you're traveling as well. But as of now, Nifty managing to hold on to almost 50 points. Bank Nifty, like I said, is flip-flopping between the red and the green. We'll be closing the show with Bank Nifty in the green. But with that, it's a goodbye from Nigel, myself, as well as the team who put the show together. Don't go anywhere. You're trading on. Up next.